Bill Ackman is a legendary investor that manages a $12.9 billion stock portfolio and invests in names like Chipotle, Brookfield Corporation, and Nike. But recently, Bill Ackman announced a new holding in a recent tweet, stating Pershing Square Capital, his investment holding company, have been acquiring shares in Uber to the tune of 30.3 million shares. Today, we'll be talking about how this fits into Bill Ackman's current portfolio and whether Uber is a good investment from its fundamentals now before deciding whether it's a buy on its current share price. If you get something out of this video, then don't forget to leave a like and consider subscribing to the channel to help it grow. So this is the tweet that Bill Ackman came out with quite recently. As we can see, it's on the 7th of Feb, so just yesterday. And he came out with saying he's been buying into Uber, saying beginning in early January, they have been acquiring Uber today to own around 30.3 million shares. Now, this is actually quite a massive holding for him if we can work out the share price and figure out how much value they have in this company. So we don't know his cost per share, but we do know the value of Uber right now. Uber currently sits around $74. So if we type that in, 74.64, and then times it by the amount of shares that he owns, around 30.3 million, then we now get to an overall value for Bill Ackman in Uber of around $2.261 billion, which makes it a very big holding in his portfolio. Now we know the overall value of his Uber position sits around 2.2 billion. We can now talk about how that fits into his 13F filings and how it fits into his overall investments and portfolio. So as we can see here, this is Bill Ackman's 13F filings in Q3 2024. The Q4 filings are not up yet. And he manages a portfolio value of around $12.9 billion. Brookfield Corporation is his biggest holding in the 13F filings at 13.48%, or around a value of $1.7 billion. But that's not his largest holding. In other news, he has a large 30% stake in Universal Music, which is worth around $3.6 billion. So this isn't his largest holding, and now Uber is probably his second largest holding. It sits right here with Universal Music sitting above it at 3.6 billion. So realistically, he's now got his second largest holding that's not even included in all of these other companies that he has billions of pounds in. So that's quite big, and the weighting and overall value of this portfolio sort of range now is now going to be around 14 to 17%, depending on how you want to look at it. So Uber now makes up 14% of his overall value that he has invested, which is quite considerable. So the reason he has put forward for now owning Uber is that they have a long-term partner and admirer of Uber, beginning with Edward Norton's show of the app in his early days. So he says he likes the app from the earlier days. And then he was fortunate to be day one investor in the company through a small investment in venture fund. But he hasn't got that investment now. So whilst a great business, Uber has suffered from erratic management since he joined the company in 2017. I think he's referring to Edward Norton here. And Dara Khosrowshahi, the new CEO, has done a superb job in transforming the company into a highly profitable and cash-generative growth machine. We believe that Uber is one of the best managed and highest quality businesses in the world. Remarkably, it still can be purchased at a massive discount to its intrinsic value, and this favourable contribution of attributes is extremely rare, particularly for a large cap company. We'll have more to share about this company shortly. So basically what he's saying there is that he prefers Dara Khosrowshahi's leadership in Uber, and he prefers his approach to making the company more profitable. I believe this sort of aligns with Bill Ackman's strategy for what he looks to do with companies. He likes having quite a big stake in a company so he can have a bit of influence, and he also likes to have someone that is shareholder focused, and he doesn't believe Edward Norton was the right fit for that, but he does believe Dara is on the right track, and that does reflect in the fundamentals if you ask me. Now, Uber have actually had a pretty rough road this past year. Now, their share price hasn't really performed that well, and that's mainly due to this sort of narrative we see here. This Tesla and obviously Waymo will end up actually pushing Uber out of the ride sharing market. And this is something that's been pushed quite considerably and caused the share price quite a bit of volatility. So if we see here, we can see that Uber's sort of share price has actually sort of downgraded and sort of just traded flat pretty much, with it recently improving after some good news. So it now trades at $74 a share, up about 9.6% in the last year. If we take a look at over a sort of max time frame for around about 2019, it's actually done very well, up about 100%. And over the past month, the narrative has sort of changed. Things have improved for this company. And in the past week, they're up now about by 11%. And this is on a change in sort of consensus about what Uber is capable of. So similar with Salesforce, with another company that I bought into. The narrative was that AI was going to kill Salesforce. In this particular case, Uber was going to get buried by Waymo and Tesla because everyone loves Tesla and they love robo-taxis. They never really talk about Uber's ability to adapt, that Waymo will use their app, which they have been doing. And I think this is something that is up for contention. I don't think it is a foregone conclusion that Uber will be driven out of their market, and far from it, looking at the fundamentals. Uber a couple of days ago released very good fourth quarter earnings, in my opinion, for 2024. So there was good things to like about this. Specifically, I like the revenue growth. Their revenue grew by 20% year over year to around 11.96 billion. I don't know why they've rounded up here, but they have. And that would beat the consensus analyst estimates by quite a bit. I think they was expecting around 11.77 billion. And so they blew that out of the water. And this good top line revenue growth is actually premium revenue growth of around 20%. And all that means is that this company is doing very well in its top line. So it's growing very impressively. But that's not the only thing that's really good about this company. They've got their gross bookings, which is a key metric for them, up 18% year over year, or 21% on a constant currency basis. And this is largely split between the two. It's pretty much even split of mobility gross bookings, so they're ride sharing at 22.8 billion, and delivery gross bookings, so they're delivering of food at $20.1 billion. And altogether, trips during the quarter grew by 18% year over year to 3.1 billion. And that's approximately 33 million trips per day on average. Looking towards Q1 of 2025, they've guided that their gross bookings is going to be a growth of around 17 to 21% year over year on a constant currency basis. So they've said that on the constant currency basis, they've already grown 21%. And their top high end of that is going to be there for Q1 of 2025. So we may see that dip down a little bit on a constant currency basis in gross bookings. But all told, it's still very good financials in general. And they've said that they've got a currency headwind to total year over year growth on those figures. Another key metric for this business is their monthly active platform consumers, so the people that are using the Uber app. And their MAPCs was sitting at around 171 million now, an increase of around 14% year over year, so a good increase in the teens there. As we said, the trips have grown by about 18%, and membership, specifically Uber One member base, has reached 30 million, which is a growth around 60% year over year. They say that launch for Uber One membership plans in 6 new countries, bring the total number of countries with the Uber One membership to 34, which include all the delivery countries that they operate in. So Uber One is actually quite a good sticky product for them. It's very similar to Amazon Prime in a sense. It gets people to want to use the app because it rewards people for spending more money on the app. It's subscription-based revenue that's really good for the business and probably helps massively with their profitability. Speaking of which, their free cash flow came in really well as their income from operations. So their income from operations was up by around about 152%, or around 2.8 billion. And then we've now got their free cash flow, which is a metric that I really like to use, and it helps with rewarding shareholders in the future. And that was up 105%, which is amazing. And it went from about $3.3 billion to around about $6.9 billion in Q4 of 2024. You can see on the graph, they now sit at this number in December 2024. But as we can see in past quarters, they have shown rapid increases in their free cash flow. That's just going up really steadily and impressively. So that has all been since December 2022, where they roughly turned profitable around 2022. And this is amazing for Uber and for Uber shareholders, in my opinion, because it shows real profitability, not just revenue growth that is consistent. So what I'm seeing here with this business is we are seeing revenues grow around 20% year over year, which is premium revenue growth. We're seeing their growing profitability story, margins are getting better, and their free cash flow is now increasing 100% year over year. Now that's going to slow down, but it's not going to slow down massively if they consistently keep doing what they're doing, in my opinion. So it depends on what sort of metrics you want to impose upon this company to try and predict this in the future. But we want to see now if Uber is a buyer based off these fundamentals that we've looked at, which I think look very good. So as you can see with Uber, it's not been a steady road in terms of their price to free cash flow. I like to look at their historical metrics surrounding profitable free cash flow for most businesses, because that is effectively what we're buying. We're buying the present and future free cash flows of a company. And in this particular case, their price to free cash flow is now sitting at 22, which is actually really good for a company that's growing its revenues around 20% and growing its free cash flow around the 100% year over year mark. The reality is that's not going to continue, but it's still going to be a very fast free cash flow growth rate if they keep doing what they're doing. So if they are unlikely to maintain at this price to free cash flow, I could see it going up from here. But if we look at it on a closer basis, just around about since they've started reporting free cash flow, we can see that in general, their average for this metric has sat closer to around 60. So fundamentally, over the past, say, 2 years, which is not a long time frame, I like to do a lot longer than that, around 10 years, they look like they are trading at the lowest ever price to free cash flow that they've ever traded at, around 22 times, with an average and a mean that is sitting well above that. Now meaning they trade for a free cash flow yield of around 4.3%. Now this is relevant because we like to compare this to the sort of free amount we could be getting with interest rates at the moment. Now my interest rate on Trading 212 sits at around 4.9%. So actually, the free cash flow yield is below that, but are we willing to pay a premium for a company that's growing and reinvesting its money back into the company? So actually, I think this free cash flow yield of 4.3% is probably the highest it's ever traded at. It's around close to its highs, around 5%, which is the highest it's ever been in the past 2 years. So this story of profitable free cash flow is actually increasing quicker than the share price, because the share price has traded fairly flat. So I would say that this is still a very good thing. It's still well below the averages and means, which are sat closer to about 2%. So it's around double its historical averages for free cash flow. And we can sort of use this to try and value this company using a DCF calculator. Now I'm going to use their free cash flow because they're a profitable business now and have been for 2 years. And I think it's a good metric to use them for. So we're going to project for a 5-year return. And we'll put a growth rate in that I think is quite conservative, is very likely to be hit by Uber of around 14%. We're going to allow for a slight dilution of shares. They've not been doing this as much in recent times. Their 5-year average is 4.6%, but the reality is I think they will be closer to about a 2% or less than that because of the sort of shareholder-focused approach that Darren Korinsky is sort of using now. They don't have a dividend, and their price to free cash flow over the past 5 years has sat closer to 28. But I would like to put it as around 25, which I still think is a very good growth rate and is well below what they're sort of likely to trade at in the future. But it is above what they're trading at now. But I think it's likely they're going to trade at a higher margin, if I'm honest, because I do believe that 22 times price to free cash flow, which is what they're trading at now, is on the conservative side. So that means they get a fair value of $88 per share and around a CAGR of 13.86%, which is a market-beating return. Now, obviously, we maybe have to add a margin of safety to this, but it depends what your outlook on Uber is. But I still think that this shows that Uber is going to be a very good investment, in my opinion. And I don't believe that its fundamentals show any sort of weakness, and that this sort of DCF is very conservative. If we want it to be maybe more less conservative, we could maybe look for it to trade around a price ratio of 26 times price to free cash flow and a 16% growth rate over the next 5 years. Now, I prefer to be on the conservative side, but with Uber, this is still very possible, and that would mean their fair value sits closer to about $100 per share and around a 16% CAGR over the next 5 years from the current share price. So whatever way you want to look at it, even on the conservative or the less conservative side, I think Uber is a good investment from a cash flow perspective. But what do you guys think? Do you like this one? Me personally, I do like this one, especially for Bill Ackman. I didn't necessarily like his buying of Nike, despite it being a good brand, because the free cash flows are all over the place. But this investment makes a lot more sense to me, and I think it's a real good one. The reason I don't invest in it, despite having quite a sort of bullish like of the company, is because I would have to look into it a bit more to understand really its moat. That's the only thing that keeps me out of this business. I thought it was initially quite narrow. We use Uber in the UK, but it's not the sole one that people use, and I could see it being used more and more maybe in the future, but it's about availability of rides. I've tried to use it a couple of times and I haven't been able to use it and had to go elsewhere. So geography wise, they don't always cover a good area. Now maybe that's going to change, but on the whole, I do think the business is very good, but it isn't most massively diverse in its business segments. So I would have to look into it more and establish if the moat is solid and is less likely to be beaten out by competitors like Waymo and Tesla. I don't really buy this autonomy story, but I do think that Uber is in a good place right now, and the fundamentals are likely to reward shareholders and Bill Ackman into this coming year especially. But thanks for watching, I do appreciate it, and I'll catch you in the next one.